We're seeing a huge uptick in institutional trading. Names that would have never, you would never before associated with this are now showing up on our doorstep and saying, hey, we'd like to talk to you about this. It went from being a career killer to it's a career killer if you at least don't have a plan. As capital moves from weaker hands to stronger hands, those stronger hands aren't going to sell unless they're absolutely forced to sell. So you're going to see, a constrained supply and therefore should theoretically see price appreciation.
We're almost halfway through the year and the crypto markets are going through 2025 with a few watershed market adoption milestones. Galaxy completing its 4-year NASDAQ listing journey. Coinbase becoming the first crypto-native S&P 500 constituent. Trading platform eToro surging 27% rather, in its NASDAQ debut. We're going to discuss and focus on Galaxy's strategic evolution and what's next after the listing with our next guest, Jason Urban, who currently serves as the global head of trading at Galaxy. Welcome to the show, Jason. Good to see you. We've spoken before, but I think first time on my new show, but welcome back.
Thanks for having me. This is great to be here.
Jason, exciting times for everybody in the crypto space, exciting times for Galaxy. So congrats on your listing earlier last week. Jason, let's talk about crypto markets first and foremost. Before you were involved at Galaxy, you were an ex-Goldman trader, I believe. Walk us through some of the similarities and differences trading cryptos versus traditional financial products.
It's actually really interesting. So when you think about traditional financial products, there's often tried and true methodologies to examining fundamentals, to looking at things, whether that's, EPS or whatever the nature is of the asset that you're trading. I think in crypto, there are a different set of indicators that you look at: adoption, throughput, so on and so forth. And so as you start to think through how you examine that, I think you just have to train your mind differently. There are certainly things that are important in the crypto landscape that don't necessarily make a lot of sense in TradFi and vice versa. I think as you start to dig down, you have to separate what I'll call that emotional or tribal nature of some of the crypto ecosystems. You're starting to see more of that bleed into TradFi, whether you have GameStop or some of that tribalism, which I think is really embedded strongly in the crypto ecosystem. There's the XRP army, and there's, as you go through, there are a number of groups and people who identify very specifically with the coins. I think you're starting to see that a little bit in TradFi. That's something that's one of the differences, but over time, it's really a lot of the same people that are trading these things. And so you see a cross-pollination that I think is valuable. So it's certainly important to keep all things in mind.
Okay, Jason, I want to come back to your trading history in just a minute because I think it's very interesting for the traders watching how you transition from Goldman to the crypto side. Let's take a look at my screen first. This is Bitcoin versus the NASDAQ. And I'm just curious whether or not there's different macro forces at play for Bitcoin, and we'll talk about the altcoin market in just a bit. But given the strong correlation between Bitcoin and the NASDAQ and stock markets overall, I wonder, for you as a trader, do you just kind of examine trading cryptos the same way you would examine trading stocks, meaning you would look at the same drivers of liquidity, same drivers of sentiment, same drivers of direction, momentum?
I think that cryptos, people since the beginning of Bitcoin, people have always tried to put crypto broadly into a box, and I don't know that that's necessarily the right way to think about it. There are times where Bitcoin will behave like digital gold. There are times where it behaves as a currency. There are times where it behaves as a risk-on or risk-off asset, where you're showing the NASDAQ chart here with the Bitcoin overlay, where it's like, okay, I can see if risk is on, risk is going to be on in crypto. I think you're starting to see a little bit of decoupling of that. It's just now beginning where people are looking at it maybe through a macro sense, where it's like, all right, is this digital gold? Should it behave more like gold and less like a stock? I think that as you go down the chain or the tail of assets within crypto, some of those start to take on equity-like composition and less like a commodity or a currency or some other thing. And so I think you have to look at this through the lens of what is it that I'm comparing. If it's Bitcoin, where it's more digital gold, it's more entrenched, it's more accepted by TradFi in the mainstream. is a little different than some altcoin that's solving a very specific problem in a very specific corner of the financial ecosystem. And that might behave more like an equity. And so when you start to think through that, you have to think about what you're trading and then why it's behaving this way. So it's definitely about the paradigm that we're in. And right now, I think with macro forces at play, we're not sure what's going to come with the new administration, whether it's tariffs, whether it's trade deals, it's geopolitical conflict. All of those things play in, and that will change people's appetites as well, to crypto broadly and to each of the specific things as well.
You mentioned there's a bit more decoupling now than before, and certainly if you take a look at the rolling correlation between the stock market and Bitcoin over the last couple of years, the 3-month rolling correlation has been less. I wonder why that is.
I think that, like I said, there are elements of this that are different. There are market forces. You have buying programs as more of these corporates try to add it to their treasury, and so that buoys it. I think that people, again, are starting to look at this more as a digital gold component where it's a store of value and therefore it behaves a certain way with regards to inflation, budget deficits and what central banks are doing. And so those elements of that are going to impact it for sure. And so I think as more people, as you get more eyeballs on it, there are differing opinions as to how it should behave. And therefore it behaves a little differently based on market forces.
Well, what are the trends in institutional adoption this year in 2025? In other words, what are the key catalysts, headwinds you're monitoring for institutional trading?
Here, I'll say this. We're seeing a huge uptick in institutional trading, or at least an interest in institutional trading. Names that would have never, you would never before associated with this are now showing up on our doorstep and saying, hey, we'd like to talk to you about this. They're all at different places in their journey. So it isn't like they're all, Ginny bar the door, they're all coming, but they're all making steps. It went from being a career killer to it's a career killer if you at least don't have a plan or a thought on how you want to address this market. So that's one element. And so as that starts to happen, I think those behaviors are going to change, right? It's going to be starting with Bitcoin, but then gradually moving, Ethereum, Solana, so on and so forth down the chain as people start to get, ingrained in the ecosystem.
Before we continue with the video, let me tell you about today's sponsor, Delete Me. Your personal information is probably online right now. Your full name, home address, phone number, sitting on data broker websites that anybody can access or buy. It's unsettling, but that's exactly why I use Delete Me. Delete Me helps remove your private information from hundreds of data broker websites. I've been using it for months, and every time I check my privacy report, I'm shocked by how many places had my data and relieved that it's gone now. Getting started is simple. Submit your info, and in about a week or so, you'll get a personal report showing where your data was found and what was removed. And it's not just one and done. Delete Me keeps scanning and removing your data throughout the year. Go to joindeleteme.com/DavidLin and use promo code DavidLin at checkout. Link down below or scan the QR code here on screen and get 20% off of all US plans today. Take your privacy back seriously before somebody else does. Is it altcoin season yet, Jason?
Oh, so in some places, yes. In some places, no. It's you're starting to, I think with more eyeballs on it, it's harder for some of these projects to just fake it till you make it. There has to be meaningful things. So I think where you see measurable progress, or you see a compelling story and a use case, that those altcoins should perform very well. Where there are people that are living on the fumes of yesterday, being the first mover, I think you're going to see some of those suffer and lag behind. So it's really a case by case. So it's incumbent on the teams, the foundational teams, the protocol teams, to create a narrative around the use case and to foster development among projects, builders, developers inside of those. And you're seeing some are being very successful, and others are struggling on the traction side a little bit. And so, in time, the wheat will get separated from the chaff. It's just how the world works. And I think you're starting to see less of a ape in, ape out market, and more of people, Like, is that a real project? Is there anything meaningful being done there? And that's healthy. Listen, that's what we all want as part of this ecosystem. We know what this is going to be. We want it to be this way. So I think that's helpful.
Yeah, this is I brought that up because this is Ethereum. If you zoom out, you see that Ethereum grossly underperformed Bitcoin over 3 months, 6 months, year to date, even 1 year. But big jump in the last month. Is that an Ethereum specific narrative here, or are we talking about this is I think there's an upgrade that happened there, but is this a broader altcoin shift?
I think Ethereum is a unique story, right? Because they've gone through whether it's Vitalik's vision or someone's vision, the core devs division, or vision rather, they've gone through some changes. And I think that narrative sometimes gets lost. And as people understand it, you'll start to see uptick. When people don't quite understand it, they're like, well, I really understand the narrative or the goal of this coin or that coin. Let me rotate over there. And so I think you've seen some of that. And Ethereum has suffered from that. I think that the upgrades have finally gone through. You're going to start to see some progress made there. You're going to still have a number of eyeballs on it, a number of very talented developers and development teams working. And so with time, I think that will be you'll see movement there. I think the other thing is there are market forces. Right. There are people who put on large positions, and that moves things around from time to time.
This is the Bitcoin dominance chart. As an institutional trader, you're looking at this chart, and the dominance level has just been structurally rising ever since 2022. There was a big decline in 2021 as people rushed into the altcoin market during that bull rally. But even amidst this new bull rally, which brought everything up to new all-time unprecedented highs, we're not seeing the same level of enthusiasm in the altcoin space as we did a couple of years ago, as evidenced by Bitcoin dominance rising. Do you take a look at this sign as A, Bitcoin is overvalued relative to the rest of the crypto markets, or B, the reverse, which is that Bitcoin is the only place to be?
I don't think it's an A or B story, to be honest with you, David. I think that there are elements that are affecting both, right? I think on the Bitcoin side, it's been the first thing to really get blessed, and therefore, blessed by regulators, and therefore you're able to see new money come in and bolster the price, right? As people look at that and say, hey, I need to be part of this. It needs to be part of my portfolio. And it's easy for new, fresh money to come in. I think in the other areas, in the other alts, a lot of times it's not fresh money, it's just rotational money. So one goes up and one goes down, and the net effect on the dominance level is flat, right? And it's just things that are building. As those narratives become more mainstream, I think you'll see, the handful of alts and a handful of projects really start to pick up pace. The question just becomes, is that fresh money that's coming in, or is it people giving up on, some project that they've had since 2017, 2018 and saying, all right, I've capitulated enough. I'm moving into whatever the new hot name is.
On Bitcoin, yeah, go ahead, please.
I was just going to say, so on Bitcoin, like I don't think that, yes, there is a dominance element, but I think it's because it's available, it's understandable to a new investor base, that TradFi investor base. And so as people understand that that's the first one, and that's easy for them to understand, and therefore it's easy for them to invest in.
Do you think the liquidity profile of Bitcoin and actually the rest of the altcoin market is going to change after institutional adoption picks up? For example, we've got ETFs now, not just for Bitcoin, but also for Ethereum, potentially an XRP1, Solana. And we have now firms like Strategy buying more Bitcoin, holding it on the treasuries. 21 Capital consortium between Jack Mallers and Bitfinex and Tether and SoftBank. They want to be another vehicle for institutional play for Bitcoin. With these companies buying more Bitcoin, do you think there's going to be less liquidity available for everybody else?
Because of the fixed supply, I certainly think that's the case. I think that right now you have other forces. If there's people that are selling for a variety of reasons, as capital moves from weaker hands to stronger hands, those stronger hands aren't going to sell unless they're absolutely forced to sell. And so, on that supply demand metric, of course, you're going to see, a constrained supply, and therefore should theoretically see price appreciation.
Do you think the volatility profile, the standard deviation of Bitcoin, will change after more institutional products become mainstream?
Without a doubt, right? I mean, I think that as you get deeper, more liquid markets, you should see a dampening of volatility broadly. It truly is, as there's more venues, it's harder to have a large sell order, say, take the price down, or a large buy order, because there's a number of venues where people can come in and take the other side of that. And so, of course, that's going to have a muting effect on volatility in the ecosystem.
Okay. Your CEO, Mike Novogratz, was on CNBC recently. He predicted 130 to 150K Bitcoin soon. I mean, it's an optimistic forecast. I don't think he's been more optimistic in the past. This is relatively conservative estimate, I think, coming from Novogratz. But anyway, what are the drivers taking us to 30% to 50% higher from current levels, you think?
Well, I certainly think it's the thing that you pointed out just previously here, where you have, new supply coming in, fresh money. As assets move from weak hands to strong hands, there's certainly less available supply, and that is going to obviously lead to price appreciation. I think that there have been, if you're looking at the charts, or you're being a chartist on this, we touched 107, whatever high you want to call it. Yeah. We consolidated back lower. We held firm there, and then rallied generally back. And I think his view, the house view broadly, is there are going to be more buyers in the second half once you get more clarity on the fiscal and monetary policies here in the U.S. as well as other major economies throughout the world. And so you're going to see people probably move into buying Bitcoin. And if you're supply constrained in the back half, as the weak hands have sold, it naturally should result in a higher price.
Does the house view take into account broader moves in the stock markets as well?
I think that we try not to delve too much into what we say publicly about our views on broad equity markets and other markets. But I think that one of the narratives that we're keeping a close eye on is what happens as you approach the 26 election. How does the economy, in the U.S. behavior into the back half of the year impact the probabilities of who controls the House, who controls the Senate? And as you think through that, you're like, well, if you're in power, you're going to do things that try to bolster the economy into the back half of the year so that you go into the election cycle with a very strong economy and eliminate that narrative. And so something like that happening should be constructive, for all asset markets and particularly crypto.
So what is the altcoin market narrative for 2025? What are the major themes you think will be moving the markets?
I think the big thing, if you think through the altcoin market, today, it's going to be development. It's going to be this concept of regulation, like what is an equity, what isn't. One of the coins that Mike has mentioned and we've talked about here, in the past, are coins that can I'll call it pay a dividend, but that looks like a security. So how does that fit into a regulatory regime? And as we get clarity for what that looks like out of DC, I think that will help people, feel comfortable or not uncomfortable investing in those. And so as we get more regulatory clarity, I think that will drive where and how people invest on the alt side.
Well, let's talk about Galaxy now. So once again, congrats on your listing. I think some people watching this or observing the news may wonder to themselves, well, first of all, that's great news for the crypto markets, but what took so long?
Well, we started down a regulatory journey, and I think that the regulatory landscape from when we initially began to where we are today has changed drastically multiple times. And so anytime you get a little bit of a headwind or a tailwind, that changes things. And so it took us a little longer than I think we would have liked, but we finally got to where we belong. So it was a good thing.
I mean, I know that the regulatory changes this year were partly responsible. This is what Mike had to say on CNBC. The NASDAQ listing comes after 4 years of regulatory delays. Galaxy spent more than $25 million and enduring 9 rounds of back and forth comments with the SEC, what should have taken at most 90 days. What changed in the regulatory landscape primarily this year?
Well, I think that there was a thawing broadly with regards to how things are viewed. We've always taken a stance that we do things the right way.
Yeah.
We make huge strides and take great pains to do things in the absence of regulation or regulatory clarity. We look for the closest thing inside of a TradFi construct, and then we probably take 2 steps back away from the line and do it the right way. That helps our investors feel confident. It helps our counterparties and our clients feel like they're in safe space. But because of that takes time and that takes money. And that was, I think, what Mike was referencing there. Like, yes, it was a very expensive process and it was exceedingly long. And it's also an asset class that not everybody understands. You and I, we've been doing this. Like, we know it. Like, if I ask you, what a mempool is, If I go and I say, what's a mempool to somebody out there, one eye will twitch and they won't know. And then you have to educate them. And that takes time, right? Because it isn't just educating one person, you're educating a lot of people. And in a regulatory role, they're not always quick to want to just take a leap of faith. They need to be sure.
Well, let's poll the audience. Comment if you know what a mempool is. Write down what you think it is. Let's test the public knowledge. Okay, so does this listing on the NASDAQ opening up your doors to the biggest market in the world, does this change your strategy? Does it change your operations at all?
It certainly gives us access to other venues within TradFi, right? Whether that's capital formation, borrowing money, raising money. It's certainly it's a net positive. And what it really gives us is the ability, and this is one of the superpowers of Galaxy, is it gives us the ability to walk effortlessly in both the TradFi construct as well as a crypto native or on-chain or Web3, however you want to phrase that construct, where we're able to behave, as a native in either one of those places.
What's the core mission of the trading arm for Galaxy, of which you are the head?
Our core mission is to unlock opportunities for our client base. There are so many wonderful innovations that are happening, and not everyone understands how to get there. And it's really to be that bridge, right? To really walk people in and say, this is the new way that finance works. And understand it. Here's what we've done to create a safe environment for you to explore that. And you'll make money and we'll make money, and those are the best relationships.
So you're liquidity providers?
So we are liquidity providers, we are lenders, we are counterparties where liquidity is not readily available. So we will commit balance sheet when we need to. We will act as agent when the client wants that, and we ultimately will help finance the whole process along the way.
What is your approach? What is Galaxy's approach to counterparty risk, especially post FTX and 3AC collapses?
So, I mean, we take a really that's probably one of our strongest points, is that we have a really solid risk framework that we work within. Whether that's exchange due diligence. I know that some of our exchanges don't always like filling out the questionnaires and going through that, but we look at counterparty risk and take it very seriously. The extension of credit, whether that's credit via lending, credit via depositing funds on exchange, on venue with counterparties, we take that very seriously. And it's very extensive. Sometimes it makes it a little longer, a little harder to work, with us, but we also recognize that it's for our client safety as well as ours. And it's not just a one-on-one, but that network effect downstream, you really have to be cognizant. If one of my clients goes bankrupt, that could be a problem for somebody else. And so we just try not to put ourselves in a bad position.
Yeah. If one of your clients go bankrupt, I mean, how can you ensure that there's still enough liquidity on your books to provide lending to other customers?
Yeah. I mean, that's one of the things that we do very well, right? Like we stand behind all of it. We have a huge balance sheet. You can see it. You can see what our company's worth. And so we stand behind every decision we make, and we're never going to cross-contaminate one client to another, and we never put ourselves in a position that will negatively impact any of our clients nor ourselves.
Okay, I'm just curious on the trading front. Are OTC trades still dominating the crypto institutional sphere, where are algorithmic trades starting to take over here?
I think it really depends on where the end counterparty feels comfortable. Some clients are, I'll say, come from an algorithmic background, and so they feel very comfortable with, trading electronically and doing things to mask their identities, in the exchange world, so that they're not getting front run or taken advantage of. And others just say, I'd like to just face a couple of OTC desks. I think credit is a big part of that. Do you feel more comfortable facing, an offshore venue? Can you face an offshore venue, or do you feel more comfortable facing an entity like ours that you can do diligence? You have publicly available financials that have been audited, a litany of people that have taken a look. And so at the end of the day, I think you end up where you want to be and how much you value that, right? Some people are like, I'm not concerned about the credit quality of XYZ. And so I'm fine doing something like that, where others are like, listen, I take that very seriously, and I know you're not going anywhere, and I know you've done things in a way that looks and feels exactly how we do it in TradFi, and therefore we prefer to interact with you.
Just moving broadly into some other divisions into Galaxy Digital, you're transitioning more into AI data centers as well, I believe. So tell us about Helios and your kind of strategy with AI data centers.
Yeah, so Helios, it was originally a mining facility, and we were in the process of building it out, doing the appropriate things to become a world-class Bitcoin mining operation. And the timing and the opportunity set of where we were in the build, where we were with the development, as well as the demands from the market on the AI side, made it, I don't want to say a no-brainer, but clearly obvious that the market demand was being met by what we had to offer there. And so we made the pivot because it made a lot of sense, both for the broad AI market for what they need. It will be one of, if not the best facilities in North America when finally done. And so it just made a lot of sense for us to, address that market demand in a different way. And so while, we still are very active in the mining, the validating business, we think that maintaining blockchains is integral for the ecosystem. We also recognize that AI is going to transform the world, and to the extent that one of our assets is primed for that, we felt it was right to take advantage of that.
Well, here's the news that came out in April. So crypto mining firm Galaxy Digital Holdings is converting its flagship crypto mine data center in West Texas to host AI cloud provider CoreWeave. As part of the conversion process, Galaxy will be removing crypto mining hardware from the site. Can you just maybe walk us through the timeline and ultimately what the strategic vision is? How much of the revenues from Galaxy will come from AI versus mining in the future, you think?
I think that AI revenues are going to be a significant portion of our operating company going forward. I think that mining will still have a role. We are going to weigh the benefits of each and address it, as they come. So from a mining perspective, if mining is a lucrative opportunity, then that's what we're going to pursue. If AI is a lucrative opportunity, or the sites that we're looking at are more constructive to that, then that's what we'll pursue. It'll be really a case by case, a basis. I mean, with hash difficulty continuing to go up, it makes mining, a harder business for all miners, not just us. And so we just have to be mindful of that.
I'm just curious, as a prop trader, as institutional prop trader for most of your career, how does AI change prop trading into the future? Is it a wet dream or a nightmare for you?
I think like anything, it depends on how malleable you are in your thought process. I mean, I'm old enough to remember when, algorithmic and electronic trading was not a thing. It was pits, and it was, a human being standing down on a floor in New York, Chicago, wherever. And that changed. And so some people adapt and some people don't. And so I think that AI is the same thing. It's either a great tool or it's a threat to what you do. We choose to look at it as a great tool and embrace the innovation here.
How does AI integrate with blockchain in the future, you think?
I mean, I think there's a lot of ways. I mean, if you just right off the bat think about deep fakes and think about, things of that nature, like how do you prove that your identity is your identity? At some point, I have to imagine an immutable, blockchain can say, yes, this is actually Jason Urban that you're talking to, not some AI generated thing that spouts out a bunch of craziness. So, that's just one. There's a plethora of these. I think that at the end of the day, you're going to look at this and say, you know what, these two great technologies converging are just naturally the way it goes.
Okay. Finishing off on trading, I'm just curious how you evaluate tokens and altcoins. How does Galaxy evaluate whether or not a digital asset or a project is institutional grade worthy or just another speculative token?
So, one of the things that we do in our token, in deciding where and whom to trade these tokens with, we go through an extensive legal analysis. Is the token, does it fail the Howey test? Does it pass the Howey test? Does it pass other jurisdictional tests? And that's not inexpensive, both in actual dollars as well as time and human capital. And so that's the first hurdle. Once we get comfortable that a token can be traded or transacted in a jurisdiction, then we move on to whether we're going to do it on our balance sheet or not. There are a variety of things. How decentralized is it? How many projects are being built on it? What are the use cases? What is the longevity of those use cases? What are the threats? Any analysis that you would do, a typical SWOT analysis, on that. What are the strengths of it, the weaknesses? Where can it grow? What's the competitive response going to be in the market? And then based on those things, we'll make decisions as to whether or not we want to have them on the balance sheet, and also make, recommendations to our clients based on what we know.
One counter narrative I've heard is that given how few altcoins are actually on the futures market and how most of them are still narrative and speculation driven, the industry is in denial about how little institutional involvement there is in the altcoin space currently. Is that true?
I think that it's like when you think about institutional involvement, there are a handful of players that are acting, in an outsized way, and there are a number of people that just stay away from it because they don't understand it. They don't have the bandwidth. It's been a hard enough slog to get Bitcoin and Ethereum put onto the tradable asset list. I don't know that it might be a bridge too far to move farther downstream, and so that too will change in time. But it's certainly part of the education process that we all go through.
All right. Final question then, Jason. Give us one or two lessons valuable lessons you learned from your Goldman days that you're able to apply now in your current career.
Oh, there's many of them, but I'll say this: trust but verify. That's always important. You want to trust the people you're doing business with, and but you also need to kind of double check to make sure you're not making a mistake. I think that reputation is everything, right? There's, one of the things we used to say is there's three things you have in this world. You have your clients, you have your capital, and you have your reputation. If you lose any one of them, the hardest to replace. You can always get more capital, you can always find new clients, but it's really hard to repair your reputation. And I guess the last one would be being long-term greedy. It's not about a quick dollar today. It's about building, sustainable relationships with your clients and your counterparties. And sometimes, the clients make more money. Sometimes the counterparties make more money, and sometimes we do okay. It's just a function of you're in this. It's a marathon. It's not a trade. It's not the moment. It's a lifetime.
Is it harder or less difficult to verify counterparty risk in the crypto space than TradFi, you think?
Oh, certain elements are harder and certain elements are easier, right? I mean, the blockchain is there, and so you can see if somebody's truly a bad actor.
Yeah.
But also, there are a number of smoke and mirrors where you have to be careful and truly look behind things. I mean, FTX is a prime example of that. So. All
right. Thank you very much, Jason. I appreciate your time. Tell us where we can find out more about you, learn from you and Galaxy Digital.
Just go to galaxy.com. All the information is there. Please reach out, and we'll be more than happy to get in touch with you right away.
All right. We'll put the links down below. Thank you very much, Jason. Congrats again. Exciting times for everybody in the space. We'll look forward to next interview.
Great. Thanks so much, David. Really appreciate it.
Thank you for watching. Don't forget to like and subscribe.